Welcome to the Access IPOs podcast, where we explore opportunities to invest in the world's most innovative and disruptive pre-IPO companies. I'm Craig Stevens, founder of AccessIPOs.com. So I'm recording today from Portland, Oregon. I'm at the FinCon conference, and FinCon is a creator conference for bloggers, YouTubers, podcasters, and happened to be at the conference during the busiest week of IPOs in the last 4 years, and today's Friday, the busiest day of the busiest week in the last 4 years. Before I get started, I just want to thank FinCon and Adobe Podcast for sponsoring the show and allowing me to use this kind of equipment, which I'm not used to. This episode is going to be a little rougher cut than my usual polished edit shows where I'm overdubbing and cutting out all the filler words. I don't have time to edit this today, so just going to do a little bit of polishing and then put it up tomorrow morning for you to enjoy. So a little bit different format today just because I'm not in my studio. I'll be back in the studio next week. So let's talk about the IPOs this week. It's IPO week, and I was hoping to be able to recap the whole week, but it's still Friday, so let's talk about what happened so far. So Klarna IPO'd on Wednesday, and we were expecting that one to set the stage for the rest of the week. Klarna came out of the gate pretty strong. The deal priced in the range of $35 to $37 a share. The final IPO price was $40 a share, and the opening trade was $52 a share, up 30% on the open, but it fell back pretty significantly down to 14%. So the Klarna IPO was sort of a fizzle, right? It opened up and came back down, and last time I looked, it was trading around 41 near the IPO price, and so we're kind of hoping, those of us who got shares in the Klarna deal are hoping it holds that 40 price. But as a lot of us were talking about, this is the biggest deal that was happening this week, and a lot of us were comfortable with that on the long-term side. So if you invested in Klarna, you might need to be a little more patient, especially if this thing falls below the IPO price. I received about 20 shares on a 110 share request, and we have several members in our community reporting that they got okay allocations. That came from Robinhood, but we definitely saw a lot of disappointment with this deal. There were some smaller allocations going out to the big requests, but a lot of the people who requested a smaller number of shares actually got filled a little bit better on this Robinhood deal. So it seems like Robinhood might be changing up their algorithm or their randomness. Remember, they say it's a random allocation, and we're not so sure about that. We're trying to figure it all out. Thursday was the Figure IPO, and this one seemed to have very high demand. It was about a $4 to $5 billion deal. The final price was $25, and that was up from the initial price range and the increased price range from 20 to 22. Priced at 25, opened up 44%, and closed up 24% for the day on the first day of trading. So Figure had a bit of a better debut than Klarna, and it's a smaller company. It's a little more exciting with its blockchain technology, and people were excited about that one. But there were some issues with allocation, certainly a lot of disappointment in the deal. I got 25 shares, and I was one of the only people that I know that got access to that deal. That was through Fidelity. But the real challenge with this one was the late pricing. East Coasters were up till 11, 12 o'clock waiting for the deal to price and for their broker to let them to confirm the shares. And a lot of us got shut out of this deal because of trying to confirm the shares. Fidelity gave us a midnight, or I think a 12:30 deadline, and Robinhood gave us a 12:30 deadline. And if you didn't confirm your shares at Robinhood, then you were left out of the deal. And Robinhood sent me a text and sent me a warning, but I was on the West Coast for that day and for that. And so I was really struggling at the conference trying to figure out what was going on. I didn't have internet access. But overall, it was a very tight allocation, and investors were disappointed for that Figure deal. But the stock is holding. I'm looking at it now. It's trading at $34, and so that's up from $25 a share. And so pretty good performance. We're not getting these explosive IPOs this week so far. These are somewhat healthy. The Klarna maybe a little bit on the weak side, and they priced that one up from the range. But Figure had a pretty solid debut. We want to see 20 to 30% increase on these deals, so they're viewed favorably, and that they don't get out of control, and so investors aren't buying shares as they skyrocket out of the box. Now, that said, today is IPO Friday, and I'm looking at my screen right now, the Gemini IPO, a lot of eyes on that deal. I did a preview a few weeks ago. You can watch that video. And if you remember, we talked about a red flag, that the revenue wasn't growing. It was sort of a flat company. It's a second-tier crypto exchange. We've got Coinbase and Robinhood, and these other exchanges are maybe a little bit exciting, but the Winklevoss twins have been these Bitcoin cheerleaders over the years. They are very well known in the space, and they're opportunistic. And so for them to launch this IPO after Circle, after Bullish, it could be a strong move for them. So unfortunately, while I'm recording this, I'm not going to see the open. I don't know what it's going to be. And so by tomorrow morning when I release this, you'll know, and you'll know what happened. And this morning I've been watching for allocations of the Gemini IPO. And we're getting the usual sort of randomness with some people being disappointed, some people getting a lot of shares, widespread across the various brokers. We're not seeing a lot of allocations for retail investors. We've seen people getting shares at Webull and Moomoo and getting shut out mostly at Fidelity. Robinhood was a little late to the game, and we're seeing, again, mixed results. So maybe Robinhood is distributing these shares randomly. We just don't know. We're trying to figure out. We're collecting some data within our private group. So if we can maybe extract some of that data, some of the members are saying we try to get that data into a spreadsheet so we get a little more clarity on how these brokers are allocating shares. But we really just don't know. It's all non-transparent. We don't know how many shares they're getting from the book runners. We don't know how many people are requesting shares. We don't know the total request. There are a lot of people who are disappointed in their allocation from Robinhood on Twitter and in our group getting just one share. And these are people who weren't flippers. You know, we talk about how if you flip shares, you might not get as much access to future deals. These are people who follow the rules, or they've been around the Robinhood platform for a while and receiving shares. We also may need to start questioning this idea of the more you request, the more shares you get. I know people who are requesting like $50,000 worth of IPO shares for some of these high-profile deals like Gemini or Figure, and they're only getting one share allocated. But I'm seeing people who are requesting 20 or 30 and maybe getting 9 or 10. So if you're investing in these deals, it's certainly not clear what these brokers are doing and how they're allocating things. And I guess that makes sense because the whole IPO process is broken. It's non-transparent. We don't know what these bigger banks are doing or how many shares they're dishing out. The very interesting things about the Gemini deal was that the S1 filing was updated to say that they were going to allocate 30% of IPO shares to retail investors. And that equated to about 5 million shares. And that's almost unprecedented. We saw the Bullish IPO, there was about 20% of shares allocated. We didn't see that in the S1, but we saw it from the CEO the morning of the deal. This Gemini deal, they updated the S1 filing from 10% to 30% that went to retail investors. And I guess what they were seeing was more demand on the retail side and not as much demand from the institutional investors. And institutional investors, they really want to see that first quarterly report. And so it seems like there's just a lot of retail who want to own this stock. Maybe they want to trade it. Maybe they want to hold it for the long term because it's in that crypto space. And I've had crypto investors and people who are interested in these companies say to me, we don't sell. Like we buy and we hold for the long term. And Gemini was certainly trying to sell the long-term view of their business, by talking about going to Mars and using Gemini there and those sorts of marketing ploys. When there's a pop, or if there's a pop, and we still don't know how this stock is going to open, if there's a pop, then retail investors, they may not hold shares, they may flip, even though they might be penalized for that flip. Gemini priced initially at, I think, $17 to $19 a share. They raised the range to 24 to 26, which is a big increase, and they ultimately priced it at 28. And when we see that, that's the demand signal if they keep raising the price. The problem is if they raise the price too much, then the underwriters are trying to squeeze out too much from investors to get it back into the hands of the issuer. That's ultimately what they're trying to do, is raise money from these IPOs. And so they don't really care as much about the investors. They're trying to just price the deal fairly, but there's always that risk of underpricing it and the stock spikes, or if they overprice it and the action the next day is a little bit weak, and then the media picks it up and says, that was a weaker deal than we would expect. A few more things on Gemini. So this is the third major crypto company to go to IPO. And I had a conversation with somebody. I said, crypto IPOs are going to work until they don't. And so this is a big test for the market and for the crypto community. Are they going to support the Winklevoss twins and hold the stock or buy the stock and raise the price? Are they going to support that? Or is this going to be a flop? From what I heard also, that institutional investors are not as interested in this. The long-term buy and hold institutional investors, because this isn't quite a growth stock right now. Its revenue is flat. So a big question is, can retail keep this thing afloat, or will the hedge funds come in and trade it? We just don't know. So tomorrow you'll know, and I'll probably report on it next week about how this Gemini IPO went. And if you got shares to the deal, then congratulations, enjoy it. If not, there's no need to chase the stock higher. The Netskope IPO is scheduled for next week, as is StubHub. And these are two of the higher profile IPOs that I've had on my website that I've talked about before. I've done profiles on them. I think StubHub was episode number 4. Netscope was a week or two ago. Netscope is cybersecurity, and we're comparing that to the Rubric IPO that happened about a year and a half ago. And the stock's up 180% to 200% last I look. Cybersecurity, SaaS, that has very well demonstrated revenue growth and demand for its products, stickiness. Customers seem to like the product, and they seem to be able to upsell them on the various new functionality that they add to the SaaS. StubHub, of course, is the two-sided marketplace for tickets and reselling tickets. And every time I tweet something about StubHub, there's always somebody angry about the company. I think so many people have had negative experiences with these ticketing agencies for whatever reason, and they just kind of think they're not unethical, but just really annoying in the way they have a stranglehold. It's legal scalping, one guy said. That doesn't make it a bad business. One of the interesting pieces about the StubHub IPO, a couple of different interesting points. So last year, remember, StubHub was planning to IPO, and they decided to pull the deal because of market volatility. Everyone knew that there wasn't market volatility. It was just going up all year, and they just pulled it out. They filed for an IPO in March. They were going to go in April, but the tariff turmoil held it back, and they decided to pull the deal then. So StubHub filed recently, and they updated their terms this week, and they priced this thing at about $9.3 billion, which is much lower than the $16.5 billion that they were trying to get in 2024. So we have seen some of these IPOs come out of the gate with their initial pricing kind of on the low end, and then they've been increasing the price going into the IPO, and it seems like the underwriters are doing a bit better job pricing these deals. And when they bump up the share price, they're going to raise more money, help their client raise more money, and that's going to look favorably to future clients. And so it's a very difficult balancing act how these investment banks do this. And when they misprice it, we think back to the Circle IPO. They mispriced that deal. And so the underwriters left a lot of money on the table for their customers. Circle could have raised a lot more money. Instead, investors made a lot more money, and a lot of retail investors participated in that deal. The other interesting piece of the StubHub is that after this IPO, the CEO is going to have 87% of the voting power. And sometimes that's a good thing, because if you have a CEO that's really been a visionary and grown the company from where it was to where it is now, and it's grown a lot, then yeah, you want the CEO to be in charge. But there's a risk there when you have just one person making all the decisions. Really, shareholders are going to have no control over that company. And so that brings up some risk that some long-term investors aren't comfortable with. And we also talked about the public maybe not looking favorably at StubHub because of the way that many of us have had bad experiences with reselling tickets, or you hear horror stories all the time. StubHub has been thinking about this for a long time, and it's good to see them going public finally. So next week, Netscope and StubHub. And we're seeing really good retail access to StubHub. I've seen it on multiple brokers. Netscope, not as many. Netscope is about a $5 billion company. It's one of the companies I was really interested in, more on the long-term side than just as a pop. It's growing, I think, 33%, reported in the previous show. But when I went looking for access to this deal after the terms came out, there wasn't much access. I did see it at Webull, and so I placed my order at Webull, which meant I didn't invest in any of these other ones at Webull. But Webull is one of these brokers that you never know what access they're going to get to what deal, and you never know what Robinhood's going to get. You're never going to know what Fidelity or Moomoo is going to get. So there's all these brokers out there, and a lot of the members in our Access Club, that's our private membership group on Patreon, a lot of them have brokerage accounts at all of them. We're sort of crazy about it. We're joking about it. Like, oh, hey, welcome. You found your people. You've got 6 IPO brokerage accounts. I've got, I think, 6. Maybe a couple guys have 5. One guy, I think, has 7 or 8. And so we are kind of crazy that we have all these brokerage accounts. And what we're finding is that you put in requests at one broker and you may get some shares. You put in requests at another broker and you might get 1 or 0. Getting shut out a lot. So if you spread your requests across various brokers, you have a better chance of getting access to these deals. It doesn't mean you're guaranteed to get deals. And when you're spreading yourself thin across multiple brokers, you're going to get a smaller allocation anyways. So, and I'm very glad I have access to all these brokers, because otherwise I wouldn't get access to the Netskope IPO. Then again, I may not get access anyways. We just don't know how many shares are going to go to the various brokers and if they're going to send an allocation my way. So I'm coming up to the end of my recording session, and I'm still looking at my brokerage account, and I don't see any of these 4 stocks trading. I didn't mention we still have Legence, and we have Via Transportation, and BlackRock Coffee Bar are also going public today. Gemini is getting most of the press for, I think, good reason, because it's a crypto, fintech, and the Winklevoss twins. But these other 3 deals are happening all on the same day. And we saw a lot of trouble allocating shares at the broker. Robinhood didn't get shares out until around 11:45 or almost 12 o'clock noon Eastern time. And that's maybe because there's so many deals and so many shares coming from the book runners. And the book runners are probably busy too, dishing out shares, because they've got 4 deals going on. And a lot of the book runners and underwriters, they all work together and sort of help split out these shares. I saw some reports of some of the larger brokers allocating shares to their wealthy customers. And so retail is getting their share to these deals. And the Wall Street Journal did a report on that story about how Gemini was sending IPO shares to retail investors. Bloomberg did a report. I had a quote in that article by Anthony Hughes about how that 30% going to retail investors is somewhat unprecedented. I think Robinhood's IPO, they might have done about 25%. But there still is this question, is retail going to keep this stock up? And we just don't know yet. I'm actually investing in the Via Transportation IPO. I haven't got allocation for that yet. I don't know if that's coming through. I put in a request for the Legence, and I did not get any shares for that deal. So a lot of disappointment, I think, from IPO investors. And if you go on X or Twitter and you search on the stock symbol, and you're going to see people being disappointed. And who can blame them? When you see other people getting allocations, or you see the wealthy clients at the various large brokers getting huge allocations, and you're maybe getting 1 share, it can be disappointing. Legence, we talked about it last week. It's a data center engineering firm. BlackRock Coffee Bar, regional coffee shop. And Via Transportation was the most interesting of that group to me, because it is a SaaS for public transportation. So I can see that it's not trading now. I don't know if I got any shares. I wish I could have booked this session at the end of the day so we could have kind of recapped the end of the day, but I will be sure to recap things next week on the show when I'm back in my own studio and have my voice back. You can tell I have a conference voice because I've been just talking for 3 days, trying to pay attention to what's going on in the IPO markets. It's the busiest IPO week of the year and the busiest day of the year, and here I am recording the show. But I'm very grateful to FinCon and to Adobe Podcasts for setting this up and allowing me to record on this really cool equipment that I don't have it at my house. There's a neat camera and a very nice microphone, and so I may end up upgrading to this microphone one of these days on my show. So thanks for tuning in this week. A bit more of an unpolished show and a different studio with a different look. It's nice to switch it up to something new and try something new. I'll be back next week in the normal studio to record a new show. I'll be certainly touching on Netskope and StubHub, and also try to touch on the Gemini IPO. I'm curious what's going to happen. I'm sure everyone's curious about what's going to happen, if there's going to be a pop or if it's going to pop and fall. We just don't know. That's all for the show. Don't forget to like and subscribe on YouTube or wherever you consume your podcast or your video. And if you like this format where it's a little more freestyle, a little less polished, I don't have the screens popping up and all the fancy editing. I'm going to try to edit this as fast as I can. It's going to be a little less polished than usual. And so if you like this style, let me know in the comments below on YouTube, or send me an email and just let me know what you think. It's been a little bit more difficult with my voice and just with people walking around and like kind of noise in the background of my computer here. But I guess I'll be a little more prepared next time for when I'm set up with this kind of studio. Don't forget to go to accessipos.com and sign up for my weekly newsletter. And if you really want to up your game, head over to our Patreon, patreon.com/accessipos. And we've had quite a surge of new members this week who wanted to take advantage of that 7-day free trial. They're participating in the chat room. We've got a lot of data there, seeing where others are investing and where they're getting allocations, where they're not. So it's turning into a pretty cool community where we can talk about allocations, and there's privacy, and we're not on Twitter and all the riffraff happening out there. So go to accessipos.com and click the red star, or head over to patreon.com/accessipos. That's all for the show. Thanks for watching, thanks for listening, and I will see you next week. This video is not a recommendation to buy or sell any startups mentioned. Pre-IPO and IPO investing involves significant risk. Conduct due diligence by reading the SEC S1 filings before participating in IPOs. Do not invest in IPOs with money you cannot afford to lose. Thanks for watching.